In this video, we're going to address what I consider one of the most important topics in management accounting: ethics. Why is ethics in accounting so important? Mainly it's because accountants are responsible for other people's money and assets, but it's also because they have access to sensitive, meaning private, information. Finally, it's because they have the important responsibility of providing well-researched and fully supported advice to their clients. As accountants, we have a fiduciary duty to our clients. What is a fiduciary duty? A fiduciary duty exists when a client trusts you, relies on you, and has confidence in you. They believe that you will exercise discretion, meaning confidentiality, and use your expertise in their best interests. A fiduciary duty is when you always act in the best interests of another person or entity. To create an environment of ethical behavior, many organizations enact a code of conduct or a code of business ethics to ensure their employees, including the accountants, act ethically. Not only do companies have codes of conduct, but governments have enacted ethics into law, mainly because in 2000 and 2001 there was a market meltdown due to fraudulent financial reporting. Basically, managers cooked the books. In the United States, U.S. Congress codified legislation, the Sarbanes-Oxley Act, SOX for short. This was to restore confidence in the accounting profession. What exactly does the Sarbanes-Oxley Act require of accountants? Accountants and auditors must certify that the financial statements are a fair representation of the company's financial condition. Top management has to certify that there is a strong system of internal controls in place. That's to safeguard the assets and ensure accuracy in accounting information. It states that the members of the company's board of directors, including the audit committee, must be independent, meaning that they are not employees. In addition, one member must be a financial expert. And the Act also increases the consequences of misconduct, which now include prison time and fines. Very large fines. Do we have something similar in Canada? In Canada, we've set up the Canadian Public Accountability Board. They oversee the independence and transparency of Canadian accounting systems. Its purpose is to increase public confidence in financial reporting and auditing. We also have regulations which govern the composition and duties of the audit committee, and we have corporate governance regulations. Basically, regulations with regards to how organizations govern themselves. Overriding all of this is the CPA Code of Professional Conduct, which applies to all accountants, including management accountants. It outlines their fiduciary duty to their clients. Let's run through a few situations you might run into in your workplace by completing a Solve It question. Consider the following situations. Who is affected by the situation? What should you do? And what are the possible consequences? Situation 1. You are at work and another employee confides in you that they have been taking unauthorized office supplies, such as printing paper and pens, from the supply cabinet. You know that they are under financial pressure since their spouse lost their job last month and their son is in university, which they are struggling to pay for. Who are the stakeholders in this situation? The entities which will be affected by the employee's actions. The company, who no longer has those supplies to run their business. The other employees, who no longer have those supplies to do their job and who might be implicated in the theft. The employee who has taken the supplies. And you, who are now placed in a difficult position by being privy to the theft, but who also might be associated with the theft. What should you do? First, you need to talk to your coworker and tell them that they have to stop taking the supplies. You need to explain that the company purchases those supplies for work use only and they can't be taken without permission. You should explain to them that their action may result in not just a reprimand, but the actual loss of their job. You need to also tell them that if they continue to take the supplies, you will have to report the behavior to their boss. This is one of the hardest things about acting ethically. You have a duty not only to act ethically yourself, but you have a duty to protect the organization you work for. You have to act as a whistleblower, and that is a very difficult thing to do. Situation 2. You have had a very difficult day at work. One of your coworkers updated the company's computerized order entry system incorrectly, and now you have a client yelling at you on the phone because their order was not shipped on time. You're tired, and when your spouse asks you how your day was, you tell them all about your incompetent coworker and your rude client. You hold nothing back, not even the client's name. Is this even a big deal? I mean, lots of people go home and share information about their day. Everybody does this, and sometimes every single day. What is the big deal? To see that this is a big deal, let's look at the stakeholders in this situation. It's your company whose reputation with their client is now at risk because you never know who your spouse might tell, even if you tell them not to tell anyone. Your coworker whose reputation has been tarnished and whose privacy has been breached. Your client because you have shared private and confidential information about them, including the company name and that company's employee name. You because you have shared information about the company you work for and their customer's name, information that is private and confidential, and that your employer expects you to know is private and confidential. What should you do? You can't fix the past, but you can change your behavior moving forward. In the future, never share information about your coworkers or your clients because it's a violation of privacy. This type of information is confidential, and you should never disclose it to anyone, not even your spouse. The consequences of your actions might be a reprimand from your boss. You never know what everyone else will find out. But it may also be a note to your personnel file. If you repeatedly share confidential information, you may lose your job. Let's look at a few other examples which you might not consider unethical behavior. Leaving work early or arriving late, which is stealing because you accept payment for the hours you did not work. Playing computer games or online shopping while on company time, which is again stealing. Taking money from the petty cash drawer because no one keeps very good records and the company is rich and can afford it. If you find yourself in any of these situations, remember that your actions affect not only yourself, but other stakeholders who may be negatively impacted by your behavior. Remember, the consequences of your actions may not just be a reprimand from your employer, but the loss of your job and your reputation. That's it for Solve It questions. Thank you so much for watching this video on ethical behavior, something that I consider to be the most important lesson of all.